What's going on, traders? Hope everybody's having a great weekend. Want to do some analysis here on the E-mini S&P futures as well as NQ, the NASDAQ. Of course, this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, so with that out of the way, we're going to kick off the video with the economic calendar for this week. So let's get into that before we start to dig into the charts. All right, so here, let's look at the calendar. What do we have in store for this week? Happy June to everybody as well. We are fresh into the summer months now. All right, so Monday the 3rd, really not too much I'm looking at as far as a major market mover. Tuesday, same situation, looking quiet. Wednesday, ISM services data at 10 o'clock. And then we also have flash services PMI at 9:45. Thursday, initial jobless claims. We will keep an eye on that, of course, as we watch the labor market along with the Federal Reserve. And then Friday, consumer credit coming out at 3. Unemployment and hourly wages, non-farm payroll, all coming out there for you at 8:30. So that will pretty much be the biggest market data that I will be paying attention to there on Friday for non-farm payroll. Other than that, it looks like a quiet week ahead of us. So we love to see that. All right. Now, another thing actually I wanted to go over, since we are closing out a new month and the quarter is actually, let me pull this back up before we get into the charts. Wanted to take a quick look at the sectors overall and see how they have been performing for the quarter, and going to take a quick look at that, and then we will just take a look at it very quickly from a monthly perspective. So, there's been no doubt that utilities, technically a risk-off sector, has been leading the pack over the last 3 months. XLU up almost 15% here over the quarter. So, massive run here, and also a notable run with XLE energy sector up about 5%, almost a 5.5%, followed by XLC communications, just about 5% there. NDX, of course, that's tech sector, up about 3.3%, and the S&P 500 there up about just under 3%, followed by XLP, consumer staples, which technically is another risk-off sector here, seeing some strength over the quarter, and that's surprising. And then XLF just behind that at around 2.5%. Up over the last quarter with financials there, and usually it's a little bit of a more of a risk-on sector, so I think that that's also interesting there, that we're seeing some strength, more notably in the risk-off sectors, but still we do have strength overall in the market. All right, let's look at it here from the monthly performance, if I can find that. Oh, no. Oh, that's not what I wanted. Why isn't it just letting me do by the month? Oh, here we go. All right. Okay, so from the month, XLK up about 8%, XLU right there. So that's interesting there. You've got XLK and XLU, a risk on, risk off, neck and neck. But I think that really goes to show you kind of the widening out of the breadth of the market. Overall, over the last month, we're seeing, it's not before, 3 months ago, we were seeing a lot of the moves really concentrated in the tech sector, the Magnificent Seven. Now we've seen a bit of that broadening out in the market, which is healthy and wanted in a true bull market. So that is all well and good for the rest of the month. Besides XLU, got NDX coming up about 7%. Nice moves there. XLC Communications about 6%. SPY right behind with the 5%. And real estate 5% as well. IWM trucking along just under 5%, 4.82% there, and then XLF right underneath. So interesting data points there, but I'd like to go over the sectors. I'll probably post the monthly performance up on my Twitter, and you can find the link to my Twitter in my link tree in the show description notes. All right, so now that we've gone over all of that, let's get into the charts here and taking a look at the monthly chart on the E-mini S&P futures, where we start off. And what's really happening here, right? In the last 3 months, when we talk about this a lot, what are markets always doing, right? Where they're either running or resting here. And we've had now on this run since November, 1, 2, 3, 4, 5 months of running, and now we are really establishing a quarterly balance. And you can see that here we are in a range, and we have run. Now we are resting in this consolidation. Now one can certainly make a case for a pattern trader type of view that we are forming kind of a flat top bull flag here, however you want to call it. Some people, you would also say that this is a flag pattern as well. I count both of them personally, but call it whatever you want. Looking high and tight here for a potential breakout, but we do not front run that breakout. Of course, we know that we have to see it break over the balance highs and then come back and retest for it to be that true breakout and get that acceptance over those swing highs for that truly to start to initiate. So although there is a nice range here, we are looking at the monthly candles. It's going to be a wider range, but we just have to really keep in mind from this perspective that really we're going to need to take out 53.30, we could say. And if you really, want to get, we still have the 5,400 right above us, which we have been talking about a possible price target. But I'm going to say 53.70. If we see acceptance over that, sure, we'll probably head into that 5,400. But I could also really say that really the breakout for the next bigger move could be over that whole number, because over the 53.70, that's about only 30 points, which is a decent move for ES, but only 30 points from a monthly perspective. That's not very large before we come into that huge psychological resistance there at 5,400. So for the bigger moves, as I was mentioning, we have to break out of the balance range. And so we can say from the monthly perspective, we've got around 50, 20, we could give it that 50.25, and we can say 53.70, right? So here is our balance. This is what we need to just be aware of. Again, this is a 300-point range here, just under from the monthly perspective. So of course, there's trades here that we can have in between this balance range, right? Okay, and that's certainly tradable, but we're not going to really see that big move until one or two things happen. Push out over, come back, boom, or break under, come back, boom. That's when we're going to see the real big move. Anything else from the monthly perspective, quarterly perspective, is just all balance and trading within this range here. So another thing though that I am paying attention to, and I do want to point out, we have a hot reading here on our Hello Momo. Now, it's on the monthly perspective. Look how hot here we stayed before we actually started to see any weakness coming in. And when the weakness started coming in, we still just kind of hung out for a while before it really started to come in and give us the pull in, right? So here we are hanging out. Can we hang out here? History says, of course we can hang out here for a certain amount of time, an undisclosed amount of time, but we are still watching this because eventually this will start to give way and we are watching it on a monthly perspective here. The longer the time frame, as we always say, the bigger the move. You can see what type of move we got when this finally started to rear its head. That gave us the last, what was it, 2 years ago at this point? That's what gave us that big, that slight bear market that we had for, about a year or whatever it was, 8 months or 10 months. So will this happen when? I don't know. Maybe I'm gonna throw a flyer out there and say maybe the first half of next year. We cannot deny also from the macro sense that we have been watching the yield curve been inverted for over 600 days now. Only happened about 3 times in history, and I'm sure you guys can figure out what times that happened in. We all know them. Well, one of them was the Great Depression, and one of them was the tech bubble. So, we'll see when that ever comes to fruition. But trying to time something like that from a macro perspective is a fool's game. This can just keep rallying for longer than anyone thinks before eventually things will start to shift. But we will pay attention to this. That goes without saying here on the monthly perspective. So, but from just the monthly candle, nice full-bodied green candle here, strong, but overall from the trend sequence, it is a sideways balance. Lastly, we just also want to pay attention. I do love looking at Wyckoff theory here. We also want to pay attention. The longer that this stays in this balance range, we have to keep into the back of our minds that this could be potential distribution happening here in the market. And if that is so, and we do get a break, we could set up for a markdown sequence in the Wyckoff market cycle. And if that happens, then we will probably see a bit of a pull down. Now, I thought we were going to potentially start that here, but we did not. Okay, the bulls came in and did what they needed to do to invalidate that. But one step at a time, we follow price as always, open to all scenarios. All right, so let's break it down here a little bit from just the blank chart perspective here on the weekly view. And what do we have from that perspective? Well, the Bears really kind of fumbled the ball, I would say. Here Friday we had a massive reversal after selling off for a few days in a row, and then we were just really looking dumpy, and the markets were able to give that end of the month reversal and cleaned up shop a little bit. So we have a pretty much a failure here, right? We can see that the Bears tried to push price down here at the end of the week, but we're not able to. Now, this candle, however, is not really, the best thing. Yes, we can concede that the bulls came in and pushed, but this could also be setting up kind of for a weekly hanging man. Normally, you'd really want to see, we can make an argument that, yes, this is at the top, quote unquote, of a trend. If this weekly candle was the week of the last week's, which was the 20th, if this was in this position, I'd feel a little bit more confident in really calling this a potential hangman. But just this alone, yes. I mean, you can see this like that it got saved, but it's just hanging on by a thread, and then we can easily see the next weekly candle print lower inside of last week's range, and then just slowly trickle down. Nothing goes in a straight line, of course. So that's another potentiality that we can have. And the same situation kind of goes from this weekly perspective, right? Unless we see price start to really take out and accept, we want to see for the bulls daily closes. Oh, that's not the right. Okay, we want to see these daily closes being up here, right? Well, let me actually just do this. If we start to see a couple of daily closes here, maybe we get one here, maybe one here, something like this, and then we see value areas starting to shift up on our TPO charts, then okay, we have a nicer setup for the bulls to have that potentiality. Again, we're looking at that 5,400 target if that happens, but if we do just see daily closes start to open up, in here in last week's range, which I personally think is going to be a little bit more of the likely situation, especially coming ahead of NFP. Not as much of a market mover as CPI or an FOMC, but probably one of the more important ones. I put it is certainly top 5. We can make arguments about top 3 as far as important data that we want to be paying attention to. So there could be some hesitation in the market to see a breakout, a continuation on Monday that we saw from Friday. But normally Mondays are a bit more range bound anyway. That being said, if we see something like this, though, we could start to make a little bit more of a potential bearish case as we've kind of looked above this balance consolidation, looked above, come back, and then now we have settled back within that balance range. What we would say there at that point is we would find our equilibrium and create that pivot zone, and that we know from the weekly point of view, if we are trading pretty much below 5,200, and I could even, considering how strong the market is, could really give it a little bit lower down into, say, 5175, unless we start seeing moves down underneath that. For me, got to maintain a weekly bullish bias, but if we start seeing the moves below, okay, then we can look for those moves back down into the lower part of that range. So but overall, interesting close there on Monday. They didn't want to make the end of the month look so ugly, and bulls came in and did a little window dressing, as we like to say, on spaces for the market, right? So let's pull up some of our drawing sets that we already have on the chart here and see where we are. Okay, here's one of them. And let's actually break it down. Let's go into the daily now, since we already went over the weekly. All right, so what do we got going on here, right? We're above still our EQ. So with that being said here, we could pull back. As long as we're holding from the daily point of view, as long as we're going to be holding over the 50% of this range. And you know what? We had a couple. I mean, we did have a close over there. You know, a part of me, and I'm just thinking out loud here, I could make an argument, you know, that I could bring this balance up just a little bit higher. But I'm going to leave it here. But we can make that argument to kind of trap this in a little bit. Either way, this still is looking like a look above and failed to me. We did not retrace the entire range, but I will watch out for that. NQ, however, is a different story. We will go over that in a moment. It has been a little bit more of a weaker market. SPY's been held up a bit stronger, I think, from the moves in energy that we have been seeing, as well as financials. But overall, as long as we're holding still above the 52.60, I'll give it, then we still will look for potential trades from the daily perspective to come back and retest these prior highs of the 28th here, and just generally in this area we can say 53.35, 53.40, high side 53.50, I'll give it that. So pay attention there. I believe that we have that potentiality of coming up into that area. But if you are bearish, certainly we can look for potential short trades up in this area for swings, you know, with our risk over that 50 area here. And we could look for trades if we do come up. That short trade could be something like that from a swing type of perspective. So let's consider that. But what, again, do we really need to see? Although, yes, this will be potentially here bullish, we really need to see what for the trend. I don't want to do it with this. for the trend really to be re-established completely in the bull's favor. Well, we can do a little trend line, right? We can even maybe make a little case here for a little ugly bull flag, right? Getting us set up for that rocket shot. But they're going to need to break that downtrend, right? So, as I was mentioning before, we're going to need to start to see candles closing here. This invalidates the trend, right? Because here we're broken over this downtrend, and we're starting to see acceptance over here over these highs, and then hopefully for the bulls form some type of base, and then again we're looking for the ultimate target there. But you can see here, this area is what needs to be structurally taken out. So as long as this area here has not really been challenged or accepted over, we can consider this excess liquidity, potential trapped buyers, all up in here, just waiting to sell into any lifts in the offer there. They're just going to be waiting. Do you want to be selling into that? Well, that's an individual question. I will say that ES is looking a lot stronger. ES SPY is looking a lot better than NQ. We are here above the daily 9, daily 20, daily 50, all that good stuff for anyone that also uses the moving averages. So we have to concede that point as well for the bulls and the bullish momentum overall. The 9 right now on the EMA is sitting at 52.91 half, basically the 20 at 52.70, 67 there, pretty much lining up right with our EQ. Okay, so that's all I've got here from the daily chart perspective, but let's break it down and go over the day trading levels. I am watching. They are pretty much the same from last week because we are still trading in that range. So let's do that though very quickly. Not spend too much time on it if I can find... Oh, you know what? There's one other drawing set I wanted to do here. Okay. This was another drawing set that we were looking at. Oh, I didn't even see this. All right, been posting this chart. This was a hypothetical, right? We had this as a hypothetical trend line of attack here. And boom, look at that. Confirmed. Okay, so now I'm going to take this off. That has been confirmed as a new trend line for us, perfectly hitting the lows. Look at that. Oh boy. My geometry teacher would be so upset for failing me on that. Okay, all jokes aside, here we had this smaller daily balance broken back inside of it here. So from this perspective, we can also watch this here if we want to look at this. Right? You can knock off your EQ. Right? So really recapturing, we're right on that line, right? 5,300. Over 5,300, we can look for those trades back up into about 20 points higher, thereabouts. And again, you can see this is the area where they're going to need to see. This was the fake out, right? This was the Thursday break. Need to see candles like this for the bulls back here. And then we're good to go for the bullish side. Let's see those candles. First step, over 5,300. If we trade underneath, still 5,300, that leaves the door open for the 70s. Under the 70s, look for a repeat of the third. Probably see us trade back down. And this is the more bearish type of scenario. We start seeing this. I will be looking. Oh, that's not the right. There we go. I will be looking for us to come back right back down to the Friday lows. So we start seeing daily acceptance back below 52.70, in my opinion. We would more than likely head very close back towards 52, the low 5200s. 5210, maybe 5211, 15, 20. Maybe we finally tag that 5200, which I know that some people were looking for. That would make sense. Maybe we get a little bit lower and come down to 5185. Could see that coming into the highs from here. But we'll see. I am paying attention, right? Overall, this is going to be the major line in the sand. All this technically is fine. We could sell down, but we get in more trouble from the bullish perspective if we start to get below here. This is the big shift. So we could even trade down here, and we can put in, this would be the weekly lower, higher low, and then we can shoot from there. This is the structure. Whoops. Right? That's the structure that shifted the market, the tone in the market. Balance, 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 accumulation, markup. This was the shift. Change of character, whatever you want to call it. We also have a similar situation here, right? Balance, 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 shift. Now they're fighting back. All right. So you know what? I'm going to actually just mark this off so we can have it. That way, if we come down, we'll be ready. If we're selling off, all hope seems lost, and you see all the bears coming out on Twitter, and then you notice that we're coming down into 51.50, you'll be like, I'm not fooled. I know that this is a shot to maybe give it a whirl on some swings. We got a nice risk to reward there. You know, we start to break back under, okay, then we're out. But we could see this. Okay. All right. Enough of me blabbing. Let's move on to the day trading levels for us. Beautiful. Okay. Didn't quite nail the low. Nailed the recapture here. Once we recaptured 52.20, you can see off to the races after we broke the structure here at 52.35. Boom, boom, squeeze, 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 squeeze. We back tested. Right. So from the day trading perspective, high and tight, maybe on the hourly, pull back as long as we're holding over 52.91 half. Okay, got to stay a little bit bullish. Certainly opening the door here for a short anywhere between 5,300 whole number right where we closed and 53.10. We can still look for potential short trades there. Definitely a shift here in the downtrend, right? You can see that. Okay. So, right. Da-da-da-da, boom. Okay, we hang out here. Maybe we get a high and tight flag. Gotta break over 53.10. That's going to give us the breakout. Look for 53.20. We break out over there. That would be my target. Possible short, but is the juice worth the squeeze? Maybe, maybe not. We don't know if that's going to break, but if you miss this move and this rejected, more or less, I'd be looking for this to go long. Go with the trend. Sure. If you're bearish and you take the short, you want this to break. Only if it broke under and gave you the confirmation. Otherwise, you're getting out most here for a little counter trend scalp, right? We're looking more towards, if you take that short, what do we teach? We're looking for the break. We wouldn't take the short. We would look for this break, the back test here, and then take the short. Right? A short from here to here, more of a scalp with the potential anticipation of this happening. This is the confirmation move short. Okay. So, but As long as we hold, again, here, 52.90. Got to stay a little bit more bullish. And we're looking for those higher prices at the 10 and maybe the 20. Underneath the 90, right? Looking for potential trades back down into the 80s. I could see that being a potentiality, and more likely than we would hit 52.75, come back to those Thursday lows. Potential long area there. You can see the market structure shift again here, right? Switch, switch, boom, reverse. Here's the opposite. Prior resistance becomes support, prior support becomes resistant. Trading 101. Okay, so we know that this is important. We've seen the reactions. Potential long there, or potential short target and cover, final exit. Depends how you want to play it. Going with how strong the market overall, you got to be a little bit more, at least in ES, a little bit more towards that bull side. If they break under 52.75, we'll look to come down into the 60s, 52.63, 65, maybe 60. Okay, so it's the same roadmap as last week, more or less. All right, let's get into the snazzy nazzy here. NQ, moving right along. That's all I've got. Bada bing, bada boom. All right. What's going on with the Nash? Let's break open the monthly. Okay, NASDAQ's my least favorite to do because it has the numbers. All right, everything's going to be under the 18 preference. I'm only saying the last three numbers. I'm not saying 18 every time. It's just assumed, okay? All right, so same situation here. We've got our balance, right? This was a little bit more of an aggressive. We see look above and fail, and when this happens, it trades the whole range, right? That's our range. That's our RT, our range theory there. Look above, we travel the whole way, especially if we break under EQ. And here we are. So from the bigger picture, unless we see moves under, and in this case, since we're looking at the monthly, it's going to be 17. 17,370. We're not going to see any really bigger move. Now we've got over 100 points here, so it's certainly tradable. That goes without saying. But we just want to be aware of this again from the larger perspective. Balanced market. Running, resting. Range expansion, range consolidation, right? We can still trade in between this. No bigger move until we see same thing. Boom. We've already hit the 1900, so I'm going to say NQ to 20,000 will be my bull target. That's what I'm thinking. If the bears from the monthly perspective really get going, I'm going to give them 1,600. Big targets, but we're looking from the monthly view. As a matter of fact, let's screenshot that. Okay. We're also noting, same situation here, hot, monthly Momo. Just something to keep in our back pocket. Okay, let's go into the weekly chart. Oh, one more thing, right? From the monthly view, we can do our monthly EQ. Right around 1800, 1850. Above, we look for trades higher. Below, we look for the lower. Right? Let's come into the weekly chart. You can see here the wick is not as aggressive as on ES. Pushing it up higher. ES made a new high of day. NQ did not. Got very close though. So that is an interesting divergence. However, we are still above here the weekly 9, 20, and all of that good stuff. So although we are about 200 points extended from the weekly 9, would like that to catch up just a little bit, a little far for me. Weekly 20s down just under 17,900. So that is also a bit far, a little extended there from the weekly points of view on the moving averages. So let's come into the daily chart now, see what we can take from that view. And here we go. Here's our balance range. Here's that fake break, right? Come back below. And now we're going to push up, right? So the bulls need to get back up over and hang out over here. Above 18, above 715.50. That would be nice. And then we can look back for 9,000 and try to get to those highs. Okay, but let's go into a daily chart we already kind of have marked off here. And here on this one, you can really see the look above, and then we failed. We traded that whole daily balance range all the way down and then some, right? We came back into this balance range, traded all the way down, fake break, looked down below, came into here, and I did not have any level here, but let's mark it off. What did we really do, right? We came back, we kind of tested the highs of this prior balance right here. So I will mark this off here for us for future reference. Activate. Okay, so we've got that one marked off for us here. We start trading underneath at 245 and I start accepting, then we'll look for about 175. Thereabouts. Okay. If we get under that, we're looking for 18/100s, 110s. Okay, so let's go right along here. What else we can say for this chart? Well, as long as we're holding over 18,500, gotta have a bit of a bullish bias, I would say. We hang out here from the daily perspective. We can get shots. I mean, where did we close? 70. So we closed about around in here. We can potentially look for those trades up into 625, more or less. Where did we top out at? Okay, so we actually closed just above. No, we didn't close just above. We closed just below. So I think that this is the area here where we could look to trade in between 510 to 625. If we really start to see the daily candles close back above here, we could look for the back tests and the trades into 710. I could see that happening. But we'll have to see if this rejects, because that's going to be the next area that the bulls are going to need to take over and start to see acceptance over to start to really negate this shift in the structure, right? If we can get, right now we're in a kind of a bullish to neutral, I would say like a cautious bullish stance here, still below the daily 9, which is sitting at 670. Well, we can 674 more or less. Of course, that's going to move. We are above the 20. Did recapture that at 521, so that is bullish overall. So that is good, and we aren't that far away from the daily 20, so that is nice. Not too extended there, but nice recapture, and we'll have to see, if we can really start to get back over that 670 there and get some closes over that really for that 9 EMA recapture, and that's going to bring us back up over into this area. But still, for me, this is still a trap zone because we can kind of just trade and chop between this, right? We're not going to see a bigger move until we see that acceptance back over 710, and then we can look for those trades back into 800, 18,800. Yes. Otherwise, we look for to see acceptance back below 625, and if that happens, then we can look for the potential moves back down into 510, and that's of course from the daily perspective, so those are way wider ranges, right? Okay, so enough with the NQ here. Do I have any other charts on the NQ that I wanted to pull up? We'll watch this, watching our trends here. Got to get over this. Otherwise, we can just see this. It's still an uptrend, but we'll trade in this channel. Getting over and accepting, the bubble's in the way, so I'm going to do it over here. Getting over and accepting will start to create a new channel for us. We don't know yet because we have nothing really to trade off of from here. So we'll see as that's established. Overall, though, these are uptrend channels, so that can stay. We can even trade, even if we're trading down here, yes, of course it's lower, but it still would be a drift higher. So, okay, let's get into some day trading levels here for us. Okay. Okay. Oops. Okay. I meant to do that yesterday, but I did not have the chance. Okay. So, here again, 18,500. That's going to really be the pivot. So, in between here, this is still a very tradable range. It's about 100 points, but unless the bears, there can be short trades in this area for sure, but unless the bears start to really break back under 18,500, it's going to be hard to come down. I must say, though, what happened on this hourly candle, this is weak structure here. If we pull up the volume profile, if we look at that, we can do it. I don't want to spend too much time on it, but you'll see. Weak. And we also peeled through. This would be very much like the market. It's very typical of the market to do. This sell was very thin. You can see here in the structure. This LVN, right? Weak structure here. If the bears really do get a sell back underneath this, it's going to be just as easy as we chewed through back up to it for us to go ahead and chew right through it again. So let's be aware of that. We break under this 500, it would be pretty easy for us to just come right through this LVN and just take us back, right? Maybe down towards these lows, or even more than likely, in my opinion, would take us down to this shift here in the market. You can see all the volume traded around in here. We would seek that liquidity. I wouldn't be surprised if we got a sell that we sold back down into the 370s, and maybe there is where you would want to look to pick up a counter trend long. Right, but look at that. It's a pocket here. LVN lower volume node, right? A lot higher concentration. This is this is still a little weak, but this is a higher concentration. You can see it, of volume. No, pocket here. This is POC. This is VPOC, most volume traded here. This is where all the liquidity is. What's the market's function? To look for liquidity, wherever it may be. That's all it wants to do. And find balance. So, I'm just going to stay on this chart for now. So, last line of fences, I'll still stay bullish for potential trades if we can. Would I hit a long here? Nah, probably not. I would much rather look for the 540s, the 500s, to look for longs to come back up. Right? But what do bulls need to do? Need to get back over 18, 620, 615. Hold over that. Now we can come back up into the equal highs around the 18,660, which is Friday's opening price. We start to get over that. We'll start to target back at towards 700, 40 points higher. Start to break under 543. Look out below. 40-point drop, more than likely to the figure. Under that, and really, you got to give this one a little bit of a probably a demand from this 630 low here. So even under the whole number, I'm going to still be cautious on that short, because especially I'm going to be looking at the internals. If internals are strong and we break under 500, I would still be looking at the 6 o'clock low. You can give this a little supply zone here. Really, really last stand for the bulls at 483, 480, we call it. Right. Bullish unless we break this. It still can pull back to here. Can pull back to here. But this is going to be the thing that shifts. And if this happens, then again, we target down here, which you can see. Where's our... Why is this? Oh, there we go. Is the top of that where the market really shifted. This is what sparked everything. We got over these highs, which we couldn't get over. Right? Rejection, rejection. This one was the one that rejected for a second, and then finally this broke and we squeezed. It wouldn't surprise me if we broke under to come back. Maybe it depends. If the internals are strong, we might just stop here at 400. So I'd be aware of that. But ultimately I would think that the 365, 370 would be where we would head. So that's what I am looking at for the Snazzy Naz NQ. All right. Hope you guys found that helpful. Let's get back into some of our other charts now and take a look at those. Okay. What's going on in the dollar land here? Dollar land. Okay. Trying to compress here. Watching this. Compressing. You know where I stand on the dollar, really, unless still we break underneath the 104. I've talked about it ad nauseum, the 103.80s. Still, even though we've got this type of setup here, we just bounced off the 200. We held. But unless we break under here, still going to maintain bullish on the dollar, right? But what do the bulls need to do if you're bullish on the dollar? Need to get over 105.10, need to get over here, and then they can look for price to come up into 105.50 area, over that, close to that 106, 105.75. So that's what I'm looking for there on the dollar. I maintain still a bullish bias on the dollar, which of course we know can lead to some pressure on the equities. All right, here's just one of our other views that we've been watching. Still holding the 200. Choppy crap price action here, though. I mean, this is just up, down, up, down, up, down, up, down. Okay, we'll keep an eye on it. What's going on in TNX world? What's going on with the yields? Take a quick peek. Still on our uptrend. Massive move up. Tried to get over, right? We retested this prior structure. We were talking about that potentiality. Came back in, but failed. Okay. That's a nice, I like that. You know, that's good, but we're still in the uptrend channel. We just came into the 9 and 20. Still holding over 45. Again, all this to me, meaningless unless we're under 43. Nothing there. So watch out here. Rates still bullish in my opinion with the 10-year on the yield. So watch out on that. Let's see if they start getting I guess we can say let's get under 45. Maybe then we can drift down back into the lower part of this channel. Maybe look for something like that to happen. Okay, let's keep it moving along here. All right, put up TLT. TLT, been watching that. As we know, TLT and TNX have an inverse relationship. Look at this chart. Now, this was one of the warning signs that we were talking about last week. Hold on one second. I have to check my... Okay. So this was one of the red flags that we were watching out as TLT was coming into this major level here, this 92. Hard for me to get bullish on TLT until we get over 92. Did hold the 9 though, barely. Came back down. This is all more or less chop from here. It's either going to be over 92 or under 88.40. This is the shift. Right? This is the shift. See it? So, until this happens, either one or the other, all meaningless. If it gets over 92, probably going to go to 93.40. This starts to break over the 200 here. My target for TLT on a breakout will be about 93.40, somewhere in that area. If we start to break down underneath 88.40, I would say 86.75. Come down to those value area lows would be my guess. Probably link up with this trend line again. So we will watch. Okay. Let's get into some of our other internals here. We were just talking about the bonds, so let's stay on the bonds here. Okay, let's see what happens with the 7-year coming into this big area right here. Possibility, nice reversal, but we could just come up here into this 114.80s and then just reject. If that happens, that's going to coincide here with this bond ratio. This is not what we want to see. Bonds are still keeping me a little bit cautious overall on this rally. We came back over the 50-period moving average here. We had some hope for the bulls. We want to see this line below the 50 to be bullish. If this is over, it's not. It's a more of a bearish data point. This was our hope for this to hold underneath. We didn't get it. It came back up, and now we're back over. This could come down here, retest the 50, and then from there push up. From here, we would see this move down. If this happens, this moves down. This would bring TLT down and TNX up. That's a headwind for the market if that happens. So I'm watching this ratio here between the TLT, the 7-year, and the longer dated very closely. So, yeah. All right. Let's go into the VIX, where we normally start off. The VIX, back down, 1272. Oh, where does it close? Basically, 13. All right. I mean, as long as VIX isn't down, for me, I hate trading when VIX is like down sub 12. and like in the the 11s. It's just a horrible market environment, no volatility, a lot of fake outs. Good for the bulls. Obviously it's bullish, still bullish down here. Excuse me, still kind of, what should I say, still bullish in the sense that we're not over 15 and we're not over 15.75. So still bullish from that point of view, but slightly drifting up. We did break this little downtrend, so we'll see if it holds 12.72. Put call ratio cooled off here. Right, we were looking that bulls were getting a little bit. We were talking about potential long trade as we came up a little bit higher. Didn't really play out because we actually dumped and then this came down, so that didn't play. But VIX is just pretty much a non-issue right now. Let's see what happens. As I said, holds 12.72. Has some hope for some sideways here. We'll probably just kind of go around like this for a bit. Maybe if we can hold that, it'll start to tick its way back up. Or it just breaks 12.72 and then we get back down in the dumps. Okay, let's move along here. We already went over the bonds. Let's look at how many stocks are trading over their 50 simple period moving average in the S&P. Back right about 50%. Okay, this is where we stopped last time. Let's see if they can, we'll check back Wednesday. See if they hold over 50%. That's what we would want to see. So, nice shot, but inconclusive. Let's get the 200. Nice shot, but let's get that back over 75. Of course, that's going to be slower moving. These are kind of inconclusive, and I'll just check on them midweek to see if they actually can hold over that 50% level, and if this gets any closer to 75. New highs versus new lows. What's going on with the breath? Okay. Dip below the zero line, came back over, almost at 100. Not bad. Not bad. All right. Constructive. Let's hold over zero. Let's get over 100. But we'll watch to see what happens if this continues to drift and we come kind of back test this previous trend here. Could reject. But could also could top out here, right? This was the high from the 28th. Just over 71. We closed at basically 80. We'll see if it holds. You'd want to basically see it hold over that. So if we start getting back readings back below, say 50, I'll be like, maybe a little bit of a warning sign. Overall, close to 100. Not bad. Kind of inconclusive with a slight push to the bulls. I'll give them that for sure. I think, okay, what's going on with HYG? Oh, big breakout here. Nice move. In sync with the market. Right off here. Okay, no bearish or bullish divergence here. This looks good. Everything good from that perspective. And I think that's it. Since we already went over the VIX futures, let's go see what's going on here. Nothing, and back down in 78 here. Not in the complacency. Nothing really with VVIX. Got nothing there that's really point out for the VIX for us. So, all right. That's all we've got for this week's video. I hope you enjoyed it. Remember what we always say. A prepared trader is a profitable trader. So, again, like I said, I hope you guys enjoyed this week's video. I hope you can take away something from it. If it's your first time joining us and you enjoyed the video, it would mean a ton to me if you subscribe to the channel. Turn on that notification bell so you are alerted every time we post a new video. And for all the other loyal subscribers and daily watchers, or weekly watchers, I should say, I appreciate you guys so much. Appreciate the likes, the comments, all of that means a ton to me and makes it worth my time to do these. Again, I do them for you guys. I would do them for me anyway, but I don't have to post them. So you guys supporting me and encouraging really gives me the fuel to keep doing it. So, all right, guys, have a great rest of your weekend, and I will see you all on Monday. Take care. Plan your trade and trade your plan. Take care.